Alright guys, welcome to our weekly market updates for December 15th to December, just give me 1 second, to December 21st. Alright, so first of all, let's take a look at last week and let's see what happened, what's driving the market. And this is a very good habit that if you want to learn to trade fundamentally, is always learn to look at what happened last week. Now, the interesting thing about the Forex market, unlike a stock market, is that basically it goes in a unit of weekly basis. So the reason is that because the market is 24/7, literally, you have 3 different time zones, the different traders to trade. So the only time they're going to wrap it up and take a break simultaneously will be on the Saturday. Okay, so it'll be Friday afternoon, Eastern Standard Time, New York time. That will be the only break for a Forex trader globally. So that's how people reset, and then the market open right away on Sunday night in New York time, which is Asian morning. So that's how we as a trader basically trying to look at, grasp the glimpse of the market by a weekly basis. So if you want to know, okay, what's happening on Monday, you really have to look at what had happened on last week and Friday. So basically last week we entered the market with not, we didn't have too much fireworks from Monday, Tuesday, and it's because everything comes down to Wednesday, Thursday. So when you have a big event like last week during the mid and the last day of the week, you wouldn't expect to see too much volatility at the beginning of the week. And in fact, I would strongly suggest you to basically just not trade for the first few days. It's because people are trying to see the sentiment of the market based on those kind of 1 or 2 big events. And that's how I usually look at the market as well, is you're trying to look at if this week we have 1 or 2 major event that has a potential to drive the market. So last week, Monday, Tuesday, we didn't have too much things coming up, but on Wednesday, first of all, we start with the FOMC meeting. And as I mentioned previously, that this kind of a meeting is very important. If there's a press conference, I will highly suggest you to not trade, ignore everything before the press conference. Because what happened a lot of time is that you will have a statement and a fund rate, but what people really care is the press conference, because that's where you're going to have an interaction with the chairman. Okay, and that's where he or she is going to give us a picture into the future. And that's what market investors and traders are really paying attention to. So I made a mistake before trading ahead of the press conference. And during the press conference, they might say something that's completely opposite to what they had written in a statement. And that will completely change the direction of the trade. So during the press conference, basically, the market is still in a wait and see mode. So I personally think it's quite neutral, but again, I never let my judgment dominate the market, and that's why I mentioned that every time you want to trade the market or understand the fundamental news, the best way to do it is to look at the news media. Because you might interpret something in the direction of A, but if the majority of analysis on the media think it's going to B, then guess what? That will be the reality. Okay, so don't fall into the trap of your own intelligence that you don't want to be right in the market. You want to make money. That's more important. And that's something I learned with my own money, is that you don't want to be the smartest guy on the forum or in the market, and they're always trying to predict where the trend is gonna go. Because at the end of the day, you might be right, you might be wrong, you might feel that you're so smart, you're such a smart. It doesn't matter. For me, I just want to make money, right? So I rather follow other people's, as long as there's a good trend, there's a good opportunity, and I make money. That is the most important thing, because we all want to trade to make money. We don't want to just be analysis or economist. Of course, if that's your passion, that's great. But I would say that majority of us just want to trade to make money. So The press conference basically it's a quite negative stance for the US dollar, and I think it's because people basically at the beginning of this year, people were looking for the US dollar to go up. For the US dollar to for the Federal Reserve to raise interest rate, and they had raised interest rate, and then during the mid-year they stopped, right? Because the inflation target did not meet the target, and Donald Trump, the president, kept pressuring the Federal Reserve as well, and they're trying to stimulate the economy, and all other central banks are doing the same thing. So then the Federal Reserve went from raising interest rate to stop and to cutting interest rate. So you see this roller coaster, right? They were raising interest rate and they paused for a moment and then they're slowly cutting interest rate. So the trend of interest rate become a downward slope. And that's why when it's a downward slope, people were think it's actually very good for the equity market. So now people wanted to know what's going to happen. Are they going to raise interest rate or are they going to keep cutting? And right now the answer is they're not going to do anything. So if they're not going to do anything, that means there's two sides of it, right? There's no high interest rate for the US dollar. So for the pure currency perspective, you have less people wanting to park their money in the dollar because there's no interest rate to be made. On the other hand, because of the low interest rate, we see the stock market, especially US equity, hitting another new high all across the board with Dow Jones, S&P, and NASDAQ, and the New York Stock Exchange. So that's a very positive news for the US equity and the equity investors. That means a lot of foreign investors right now want to continue putting money into the US stock market. And how are you going to buy the US stock? What do you need? You need a US dollar. So that's another wave of US dollar buyer. So for me, I think these two forces basically eliminate each other. And that's why US dollar is quite neutral to a little bit negative sentiment. I still personally, fundamentally think US dollar is quite strong just for the above reason that, yes, Federal Reserve is not going to raise interest rate, but so do other central banks. Nobody is raising interest rate right now. If you look at the economy in the global stance, US is still the most promising country to put your money into. And that's why it's reflect in equity market. And because of that, people are still need to exchange their money into the US dollar in order to buy stocks. So I still think the US dollar has a very strong fundamental demand. And if you're a long-term swing trader, I still think it's a good currency to buy. Now, Thursday, the biggest event, of course, is the UK election. And the result come out, big win for the Conservative Party. And it's very positive for the business sense. And that's why we see a very, very big rise in the British pound. And then we also have an Ecb meeting. This one didn't really have too much fireworks because we have a new chairman. And everything is still like up in the air. People trying to see if she's going to change the direction or everything is still status quo, that we're still heading into a basically easing situation for the euro. If that's the case, if everything is still the same for the euro, then we expect to see euro continue to be a weak currency from now on all the way into 2020. And that's pretty much what happened last week. One thing to mention about the UK, I did make a midweek video discuss this already, but some people ask me, isn't Brexit negative for UK? So how come when the Conservative Party won the majority seat in the parliament, the British pound become so bullish? Well, yes and no. Like, very simple thing is that whatever happened in the financial market, there's one thing you have to remember: the market hates uncertainty. So the market rather to have a negative future than not knowing what is the future. Okay, that's a very strong rule of thumb. So yes, when the Conservative Party won the election, and that means that UK is most likely really going to leave Euro by next January, and That's definitely not a good thing. But remember, this piece of information, this had been a reality since the past 3 years, right? Since they voted to leave Eurozone. But what had happened in the past few years is that they say they're gonna leave, but they are not leaving. And the market or the business investment hates this kind of uncertainty, because for the business, they need to plan things ahead. For any big corporations, the business plan minimum is always 3 years to 7 years. And it doesn't matter how the environment is, right? Business always have to adapt, but they need to know what's going to happen in order for them to make a plan of adoption. And because the politics of UK in the past few years has been completely up in the air, we see that we have Theresa May couldn't pull the deal, and she finally left as a prime minister. And then the Conservative Party had their own voting, and Boris Johnson won. And then he trying to leave Europe by Halloween. And then there's a lot of political drama. So this time, finally, with a big majority seats, one thing for sure for the market is that, okay, at least now we know we're going to leave Euro for sure. And that's why people and the market love certainty. And we see a big jump for the British pound, because that's, sounds crazy that, oh, how come this is a good news? Well, that's a situation right now that people want something happening rather than nothing. People are sick and tired of hanging in the air. So that's why, even though the Conservative Party won, and even though the Brexit now is for sure, we still see a big rise for the British pound right here. Let me enlarge this screen so you'll see. See, this is hourly chart. We still see this almost, like I said, almost 500 pips of jump in the British pound for last week, and people just love it. Okay, so that's what happened. That when you trade this kind of news, or when you trade currency market, you really have to be aware. Not only the technical, I know a lot of people love technical analysis, and there's nothing wrong with it. I trade technically as well. But you also need to be aware of the data, and most important thing, you need to know the story, what's driving the market, because that's where the big money is. Remember, we as a retail trader, we only want to follow the big sharks. You don't want to go against the big players. And the big players with their billions and millions of dollars, they are not going to be in and out of a market, right? They're going to follow the big event and park their money and go slowly. So essentially, the way I trade it is trying to follow this kind of big player, and I try to follow their trend. So for them, now it's a good thing, okay, for the British pound. And another thing I want to mention is that I think I mentioned before, the best way to quickly understand what's driving the market is to read the news. And personally, my favorite site is Forex Live. It's free. It gives you a session wrap, and it just gives you a storyline like this: risk keep firm, aiming cautious optimism. That means that right now, because last week's the voting and FOMC, the market is very positive right now. How do we know? Look at the stock market. Very, very green, all positive across the board, but cautious optimism. Why cautious? Because what's pushing the market aside from UK election is that the Chinese and US had reached a phase 1 deal. Also, US and Mexico and Canada has also reached a deal. So all those things are good, but it's very unstable right now. Right? China and US, don't forget, they're still battling a lot of issues, and anything can change, right? So that's why it asks you to be, it's optimistic, but cautious optimism. Okay, so this is a very good headline. That's pretty much sum up what happened in the market right now. Another thing is that when you want to trade election things, like I personally don't really trade elections unless I have followed it. The reason is because it's very hard to predict the result. If you look at what happened last week, is that we actually have a dip. So if you look at this line at 1.3099, almost 1.31, it was a very strong support coming along to this election, December 19 next week. And then before the election, we actually dropped. Right? We actually have make a new low. Now, in hindsight, right now, we all know, oh, this is a false drop. But during the time, you don't know. A lot of people, a lot of traders will got scared and just exit their trade only to miss out this big opportunity. So if you want to trade election, one thing is that you want to make sure the risk and reward make sense. Okay, that's first thing. Second thing is you want to be able to withhold this kind of voices, because election is very dramatic. And when you trade through it, when you read different headline, different poll, watch different news station, they all have different interpretation because they are all funded by different parties. And that's why if you truly just trade through that, you have to have a very strong emotional strength to hold through it. You need to make a prediction and you need to hold through it. And if you're wrong, then take your losses. Don't try to beat the bushes. Right? If you're wrong, you're wrong. So I just want to point out that we actually have a dip, right? And that's why this thing is exactly what scared a lot of traders off. And then we have a huge shoots up. Okay, now if you look at the election news before the election, you will also see that British pound was not really positive. People were thinking that, hey, maybe the poll was wrong. Maybe the Conservative Party was not going to win the majority. Maybe we have a hung parliament again. So all these things has caused a cable falls to session low, begin to look wobbly, right? So that's how you want to trade it. So again, the key to trade election or to trade through any political events is that first of all, you have to have an emotional strength. Second thing is you have to make a prediction and follow through. And third thing is you got to be able to take your loss, because you might be wrong, you might be right, and it's as simple as that, especially for election. So make sure you have a big and good risk-reward ratio to make the risk worthwhile. Okay, so that's what happened last week. And let's take a look at this week. So because of that, we of course enter the market Monday right now is quite optimistic, quite positive. But anything can change. And what's going to change that? I think number one things will be the US and China trade deal. That's something that everybody is looking at right now. And that's something that is not on the calendar. So that's why that's something you need to follow the news and to listen to the news to see what happened. That's going to drive not only the currency market, but also the stock market in general. Okay, aside from that, we also entered the market yesterday with very big positive data from China. That also add on a lot of optimism. And this week, we have, like monetary policy meeting from Aussie. All these are important, but it's not a headline nowadays. Even if you are Australian dollar trader, this will not provide too much sentiment in comparing to the Chinese and US deal. Because if China and US reach, we have a very positive news coming out from China and US, then we'll expect to see Australian dollar and New Zealand dollar keep going up. So that doesn't matter what the monetary policy meeting is, it's not going to change the strength of Australian dollar. We're also going to see unemployment rate from UK. Again, it's not going to change the sentiment of election. Right now, the headline or the focus is still on the Brexit. People want to know whether the Conservative Party can make a plan. And right now, we also remember, because the Scottish party had also won the big seat in the parliament, and right now they want to hold a second referendum. That's going to be a ticking bomb for the UK politics if the Scottish trying to hold a second referendum or not. So that's something we need to watch out for if you are a British pound trader. And Wednesday, we have the CPI. So this also, I don't think is such a big event. Again, everything to do with pound will be highly sensitive to the Brexit. Now, cash CPI will be good for the Canadian dollar, because what happened to the Canadian right now is we don't really have too much things happening. The big election for Canada has passed. So everything is calm down right now. The US and Canada and Mexico are going to sign a deal, or maybe they already signed it. That part is taken care of. So right now for Canadian, we have to shift our focus to the central banks. And right now the Bank of Canada is in a wait and see, right? They say wait and see. They will let the data determine the future action. And that's why CPI become very important. Because if we have a positive inflation data, that means the Bank of Canada might continue to raise interest rate. And don't forget, out of all the major central banks, there were only two central banks that had raised interest rate. One is Federal Reserve of US. The other one is Bank of Canada. So that's why Canadian dollar, it has a very strong fundamental strength because of that. And if the inflation data continue to prove that we are on a high inflation market, then the Bank of Canada will continue to raise interest rate, and that will make Canadian dollar become stronger. We have Australian dollar employment data. Now this will be more important than the monetary meeting, because this will tell you their job market strength, and that will basically give traders some of the strength or weakness into Australian dollar. And then finally, Thursday, we have the monetary policies, a summary from UK. Now this will be important because this will be the first monetary policy meeting from UK after the election. However, they made the decision already before the elections. So I guess it's important, but it's not going to create too much drama. However, people will want to know what are the monetary stance right now, if they are in line with the Brexit, or what kind of plan do they have if we have a hard Brexit in 2020. And that's pretty much about it for the main events for this week. So obviously not as exciting as last week, but still have few things to trade for. Number one is to watch out for the US and China deal. And number two is to watch out the continuation of political updates in UK. And number three is the Canadian inflation data. And number four is you can trade, also watch out for the Australian job data. Okay, so personally, what kind of trade I have right now? My trade is still in, because as a swing trader, really not much change for me. Right now, I had entered a British pound versus Japanese yen last week, right after the Conservative Party won. And the reason is very simple, is that I think that British pound might continue to go up right now, that the market still likes the fact that we have a certainty over the Brexit. And that's one thing for me to buy British pound. The reason for me to sell Japanese yen is because right now the market is very positive from the US and China trade deal, Brexit, and also don't forget we're entering into the Christmas rally. So that will be another push for the retail market and also the US equity. So that will be a very positive potential for the market, which will be very negative for Japanese yen. So that's my reason for entry for this one. I picked this one because this one relatively has a very good risk and reward, and we have a very strong support. If we hit this line, then basically the trend will be turning. This is the hourly chart, and I think technically we are in ascending triangle now. I don't want to go technically because personally I don't really care that much about the technical analysis, but I know majority of you likes to trade that way. So I would just say, if you are a technical trader, yes, we'll see if we can break above this line. If we did, then this will be a completion of an ascending triangle. Okay, so if that's the case, then we should at least hit until 153, which is the length of this one. Continue from here, 151. Okay, so we'll see what happened. That's one of the trade I'm currently in. And another trade I am in is Aussie cash short. And I was in Aussie cash short since I think last week. And I'm still in this trade. And the reason for me to enter this trade is I'm very bullish for the Canadian dollar, just for the fact that they are the only central bank that was on the path to raise interest rate for 2019. And right now they are still neutral, unlike other central banks that are on the cutting path. They're still holding their interest rate. So I'm still quite positive for the Canadian dollar. That's the first reason. Second reason is because we have another oil output cut from the OPEC and Russian. So OPEC and Russian are still trying to control the oil market, trying to stimulate the oil price. And because of that, it will be very positive for the shale oil, which is US and Canada. So that's the second reason I'm positive for the Canadian dollar. The third reason is because the US dollar is in a kind of negative, a little bit bearish sentiment right now, which US and CAD is always opposite. If you have a very weak US dollar, and the reason again is because you have a weak US dollar means you have a strong oil market, because oil is denominated in the US dollar. So that will also be an indirect strength for Canadian dollar. Now, obviously, this sentiment will largely shift determined by this week's inflation data. So we really have to see what's going to happen for the inflation. So this is my Aussie CAD trade, which I'm still in right now, and just still waiting to see. Just give me 1 second. See if I can zoom in this one for you. All right, so yeah, so I got in this one. You see, I almost got stopped out last week. And again, whenever I enter the trade, well, whenever you enter the trade, always remember the most important thing is, are you willing to take the risk? If the answer is no, then do not enter. Because no matter what analysis or technical analysis knowledge you have, trading is essentially a probability game, a game of probabilities. So you will always have a losing. Losing is part of the game. So I entered it basically on the above reason I just mentioned. I like my risk and reward. I think it's a really good ratio, and just still holding it passively. So this is one of my swing trade, also in pound yen, and another one that I am not in, but I am in a pending order is Euro New Zealand short. And I like New Zealand dollar a lot because of the current sentiment. And in fact, New Zealand dollar had been a very strong currency, I think, like from the end of November to December right now. If you look at New Zealand, it is really, really went up so high. I actually was in New Zealand a couple weeks ago and got out, was very happy for my profit, but the pair continued to go up even further. So it's just a very strong New Zealand dollar right now. Now, New Zealand dollar, it will always have a fundamental strength just for the fact that they are very strong. They are very high interest rate currency. But also because the central bank RBNZ was not looking to cut interest rate anytime soon. So that had fueled up the New Zealand economy. So basically, it's a very small economy, but it's quite stable. It's in a way like it's in his own South Pacific Ocean, and there isn't too much risk politically for the country. They are very diplomatic with all the other countries. So as long, the first thing about New Zealand is they are the biggest trading partner for China, or China is their biggest trading partner. So as long as they are good with China, there will always be a good positive strength for New Zealand. Okay, that's one thing for sure. I don't like euro dollar is because, first of all, the ECB is still on the easing path, cutting interest rate. The European economy is not too good. We have a lot of ticking bombs in the euro, right? Ranging from what happened in France right now with the president, and the Labour Party and the workers. They have a lot of protests going on. The Italian debt, and also the fact that euro is in a crossroad between US and China. Euro is in a crossroad between US and Russian. Euro is also in a crossroad between US and Iran. So EU is in a very tight hand right now. It's a very big economy, but it's very slow to adapt and to change. Generally speaking, it's very, very conservative. So that's why the currency itself is not something too exciting right now. And for that being said, euro dollar is in uptrend right now because dollar is very weak. But for me, I think euro NZD is very good for short, just because the above reason I just mentioned. So I am in euro NZD pending short, and as you can see, it had been a very, very flat trend for the past few weeks, basically past few days. So I am not filled yet. I'm still holding it. I'm still like waiting to see if I'm gonna get filled. But it's pretty much sitting on the sideline for the last week. So we'll see what happens for this trade. And that's pretty much the market analysis I have for you for this week. And again, I know there's a lot of information, especially if you are a technical trader entering into the fundamental market. The question for you, a lot of people will always ask is like, why do I need it? And I think that you don't need to trade fundamentally, but it doesn't hurt and it will definitely help you with the fundamental knowledge, because you can still trade technically, but then you would know like what is driving the big market right now, what is the big pictures. So you can still do all your charting and backtesting, but if you want to grabs the big trend, at least you can avoid a lot of things. You can avoid a lot of things that when people say, how come the technical doesn't work? It works. It works when the market is calm. It works when we don't have the big events. So that you know that how to avoid trading through this kind of event, and also maybe use this tool to help you better select your trade. Okay. So that's pretty much what I have for you for this week. Again, I will personally watch out for the updates for the US and China trade deal, and also the UK election afterwards, Australian job data, and Canadian inflation data. Okay, so I'll come back with another midweek update if I have time. Other than that, feel free to ask me if you have any other question. Okay, great. Thanks for watching, guys. Have a wonderful week.